Hello, World Wide Web. This is James. Welcome back to my stock channel. Please like the video and subscribe. We're going to do a quick one on Wells Fargo. They're on the hot list of endangered banks this week. Everybody's panicking. They have a little fear that they're going to be next. Let's see if those fears are justified or if we're even capable of figuring it out. The stock over 5 years. Ups and downs. Been up to $56, $60, down to 41, with a low pit of 23. And that 23 came during COVID. So COVID was not good for the banks. Apparently people quit making their payments. I think the government actually made a law where people didn't have to make payments. So there could have been a lot of things going on that severely crush them. If anyone's mad at the evil bank, sometimes you should come back and look at this chart when they weren't allowed to collect any money for a year. And that was nice. A 1 year chart, pretty well balanced out. We got a late crater at the end. They just had to cough up $3.5 billion in fines for overcharging customers, opening up accounts and making deals with them that they did not agree to, excess overdraft fees, and breaking some banking laws potentially. They settled for $3.5 billion. They actually paid or put in a net loss that doubled by 50% last quarter. Let's see if that's reflected here. Yeah, looks like they still made money though. They went from making $21.5 billion in the year to $13 billion for the year. I don't know if that's exactly 50% or close to it, but they definitely made less money. 2020, obviously the COVID. This is probably the norm. The 2018, they're bringing in 23 million in profit every year, unless COVID happens, or unless they have to cough up $3.5 billion of it in fines. Not only did they have to cough that up, the gap here is a lot bigger than that. This is a $8 or $9 billion gap of lesser money that they earned year over year. So the fine itself wasn't the problem. There was also a loss of revenue. They did less money. Maybe therefore they had less profit in these previous years. They're pretty much equal with this one. Similar profit margin, less revenue, maybe less profit and the fine. So why did they do less revenue? People aren't sending them the money, perhaps. They collect money from loans that they have made. That money is considered revenue that they take in. When they make the loan, often you think it would appear on this side over here as a liability, since they're out that money and it's getting paid back. A note might be an asset. Clearly, whatever it is in revenue, however they're doing their books, they did not collect as much. No, it wasn't COVID again, but at least we have a good excuse for that one. What's your excuse for this one? People aren't paying for something, and that's a problem. Be interesting to see their next quarter's earnings. We'll take a look at that as well. Revenue, $72 billion, apparently is severely down. Let's look at this on a quarter-over-quarter basis. Looks like it came down in the beginning of the year and went up in the end of the year. This rolls all the way up to December of 2022. Looks like it was a pretty stable year on this chart, the quarterly chart. I don't know how they ended up. Yeah, well, they never lost money. They just didn't earn half what they usually earn. So they still have a PE. They still have an earnings per share. Let's take a look at the balance sheet. This is where we can usually see some more signs of danger. Usually on these banks, you have a balance sheet where the assets and the liabilities pretty much match up. And they say when a mismatch occurs in this gap is when there's trouble sometimes. Like these assets might be the notes, and the liabilities might be the money they gave out. So these are loans on paper. Looks like $1.5 trillion worth. Unbelievable, 1.8 trillion. I don't see any really difference in any of these. It looks like their loans are out there. They haven't taken them off the books yet. Whatever brought in less revenue in 2022 didn't seem to hurt their loan structure. And people, if they hypothetically weren't paying their bills, you would expect some of this to peel off. It did not. They did less revenue. They still have all that money out there loaned, and the note and the loan still intact. It looks like no growth or decline. Nothing scary with their balance sheet that I can see. Cash, $361 billion. And I guess we can say the amount that they had on loan is going to be about 1.8 trillion. Hopefully this is a right side up factor. This is probably it's probably what the road. These are probably the notes. Maybe I have that backwards. I'm not a banking CPA. But yeah, it looks like, I guess the more people would pay it down, one of these bars would fall, and the value of their note would fall also, so they would fall together. So maybe that's why they're always together. I've looked at like 30 banks in the last couple of days. I've seen this chart over and over again. Silicon Valley Bank, same chart all the way up through 2022. So I guess the chart's really not going to tell the story, but apparently there's some anomaly. Maybe you have to look at 2023 to see it, but that's where you would see the anomaly, a sudden gap between the two, or a sudden drop. Yeah, you can do the math and figure out that some shit's hitting the fan. 3.79 billion shares outstanding. They got a lot of shares. They are a massive company. 361 billion in cash with 1.8 trillion in assets, 1.7 trillion in liabilities. If shit hits the fan, they don't really have enough money to, they're gonna have to do something. That just doesn't seem like enough money in proportion. Will they continue to have a net income? Well, they won't have another fine. Hopefully that was a one-off, and they already paid it. I don't know. They look healthy from everything that happened up until now. The real question is, are people not paying their home loans this quarter? Are they not paying their car loans this quarter? Did they loan money to Silicon Valley? Did they loan money to the other bank that's going to go blow up next week, or the other bank that's going to blow up next week? I don't know. They are closing locations. They're opening new locations. They were nice enough to replace my location with an ATM machine 3 years after they tore down my location. I have not had an ATM machine to use anywhere near my house for the last 3 years. And now all of a sudden I got an ATM. Thank you, Wells Fargo. You're such good people. I don't know. I think the stock is going to be hurting on Monday. I think there's going to be a lot of fear breaking out on this market. I'm surprised the fear didn't attack this already. You just have to worry if you're with any bank. The price per earnings should fall a couple of points for all of them. This one's at 13 right now. We'll see how that compares with some other banks. This is one of the big ones. They just had a catastrophic event to their balance sheet. Let's see, they lost $3.5 billion. And how much do they have in their bank again? Yeah, they have 361 billion. So that wasn't even a pimple. They probably could have just paid it with cash. I don't know why they wouldn't do that. Maybe they did, and then they stuck it on their books as a loss, and that's what we're seeing here. So, But they still they lost a chunk of themselves. Something came down in the revenue. And the question is, what in the hell was it? Where did the revenue vanish from? We're going down to 72 billion in revenue from 82 billion in revenue. A $10 billion revenue loss. Maybe 12-13% revenue loss year over year. That can't be good. And it clearly had an effect on their earnings. So somebody's not paying for something somewhere along the line. We know they didn't pay for anything during COVID. That makes sense. They came right back to paying for it in 2021. All of a sudden, for some reason, they're not receiving the cash like they used to, up to the tune of 10 to 12% less cash than they used to. How catastrophic is this? Did they buy variable exposure? Lots of questions to be answered. I wouldn't be a buyer of any bank right now. If you like to play with these things, I would wait till a couple more of them fall before you dive in. There is going to be a shitstorm surrounding the entire industry, or at least a stigma or a fear. Even if nothing else fails, there'll be a fear. Maybe put this one on your list in the low 30s. If they do implode, it's going to zero. So I don't know how much you like to gamble. Yeah, so I wish I had some better answers for you on Wells Fargo. I will seek to get them. We're going to find out in our next video why this revenue fell off, where it came from, who didn't pay for their what. Because this happened. This was real. This was money that was on the books to be collected. They made a loan to somebody. Somebody didn't send that money in. And on the other hand, if it's depositors yanking their money out of the bank, that's alarming. That's a lot of money to have yanked out of your bank year over year. We look at this thing quarterly once again. We see it kind of rebounding its revenue towards the end, losing more to the middle. I don't know, maybe people spend at Christmas. That's why it's bigger. In December, I don't know. The revenue is very deceiving because it is seasonal in many regards. People make major purchases at different times during the year. Very hard to analyze. Let's look at a couple of the news articles real quick. SVB's financial collapse won't materially damage Wells Fargo. Won't materially damage it. I guess that means it can still damage it. I don't know. JP Morgan, Wells Fargo stocks tumble as SVB woes spark contagion fears. I don't know why they keep calling this SVB. It's the SIVB. It's the ticker symbol. Wells Fargo says technical issue causing customers to report missing deposits. Ooh, that's not good. That was one day ago. Morgan Stanley differ from failed Silicon Valley Bank. Wells Fargo and Morgan Stanley differ from Silicon Valley Bank. That's good news. Wells Fargo customers react after likely glitch causes account issues. Liquidity concerns are putting pressure on banks right now, says Wells Fargo. So 2 days ago, they came out with the news, or yesterday even, or Friday. They were really fast into the press saying, hey, not us. They're saying, hey, we don't have these problems. Nice to see. I expected to start to see that out of every bank. Every bank should have an announcement right now telling their customer, telling their stockholder, telling their depositor, hey, not us, you know. And if they're lying right to our faces and it is them, well, then we want to arrest them for fraud later or something. So hopefully these are legitimate truths about the company, saying we're not in danger of this. Keep in mind they had $480 billion in deposits at Silicon Valley, and only $20 billion worth of loans were made on variable. So that tiny little exposure to the variable bond market, which they had to continue, I guess they borrowed the money at a variable rate. just having to make that payment was so bad it caused the company to wreck itself on just $20 billion. Um, it could be a higher amount than that. That doesn't even sound logical to me. It seems like they could have fixed that somehow. Um, Maybe borrowed the money at the discount window and paid off that real quick, and then gotten off of the problem. For some reason, they couldn't get off of the problem. Call other banks every night, get loans, and get out of that position. It seems like it would have solved the problem. I think we're going to all have to understand what the problem was a little bit bigger. It might be a little bit too early to say whether you're exposed or not. If you asked the people at Silicon Valley Bank last week if they were exposed, they would have said, oh, absolutely not. They looked everyone right in the eye. They even tried another public offering towards the end to try to get the money to make up for their shortfalls that they knew was happening, that they weren't going to come out and tell everybody about. And when people asked, Jim Cramer and them and everyone else came out and said, oh no, we're great. And this was like last week. So does all this Wells Fargo saying that everything's fine, can that be trusted? I don't know. I don't have a truth lie detector test. I can't tell you. All I can say is that if they're going under next week, they're not going to tell you this week. They're going to say, oh no, we're not, we don't have those fears. We don't have those problems. These people don't know what they have. It's a multi-trillion-dollar bank. God knows what they're exposed to. I guess we'll find out in the future when it happens, and that's when you find out about these things. Scares the crap out of me. Any kind of business where you can just wake up and say, okay, and we're closed. Just like that. Thank you for your depositing your money, and your account is zero. I mean, literally, somebody walked into Silicon Valley with a few $1,000,000 like last week and made a deposit. Can you believe this? It was probably their inheritance. They probably got this money because someone died. They're probably like, oh my God, I don't have to work anymore. I can quit my job. They gave their boss the finger. They went and made the big deposit. And guess what? Now they're back at the workplace. They had to apologize to their boss for giving them the finger. Wells Fargo, everybody, take it for what it's worth. I'm not going to recommend any bank during this little thing. I think just the fear factor is going to be immense. I see a drop in 10-20% just on fear factor, and that's if they're not exposed. If they are exposed, and then maybe another 5% on Dow news, because this one moves with the Dow. So if we do have a recession, yeah, I think you might be looking at a $20 stock here, even if everything is healthy. So I would just wait on this one. It looks like we're going to have a recession. I wouldn't short it. You don't know what rabbit out of their hat they might pull out of actual good news. Or maybe they could prove or be audited or have a third party prove that they have non-exposure. Them saying it isn't enough for me. At this point, I want a colonoscopy of this company. I want, and I don't want Moody's, and I don't want some other third party that's paid by Wells Fargo to say good things about them. I don't want them delivering the news. Not an analyst. We need an actual, real third-party, neutral, legitimate audit. I don't even know if that's possible in this country anymore. Everybody's so divided and lying through their teeth. Is Wells Fargo bigger than that? No. They just got in trouble for lying to customers and breaking the law and doing all kinds of things that they shouldn't have been doing. So did they do more stuff that they shouldn't have been doing? They're not going to snitch on themselves. The fear is real. Stay away from banks. I might do a couple more banking videos today. We'll do some of the larger banks. We'll see if any of them have any obvious exposure, or at least will admit to it in any way, shape, or form, or find any anomalies with a balance sheet that would make us question. I don't like this loss of revenue annually. I don't like the fact that they did less revenue by $10 billion in 2022. That to me looks like an anomaly. It's either people leaving their bank or not paying their loans. It's one of the two. And if 10% of everyone didn't do this in 1 year, and these problems have just gotten worse, can you imagine if it comes down to here? You know, maybe we do have a banking crisis here. If this problem is perpetual, if this is their new pitch, if this is their new revenue, it's going to be $60 billion next quarter or next year instead of 72 billion. That's going to raise the income. They're going to become a losing company in the stock market. I don't know what they're, whether they're going to stay open or closed at that point. I don't know what happens. I guess just because your stock fell to crap doesn't mean that you're out of business, but you're definitely in the business of losing money at this point. They have tons of it though, so I wouldn't worry. The tons of it that they have, is it theirs? Is it their customers? A lot of questions to be asked there. Um, there's so much they can do with their books. This decline I find scary. Remember it. It's on the income statement. 2021 to 2022, 10% decrease. Let's all remember that when we're watching these other videos. We're going to find out whether other banks suffered the same revenue fate. To look into our conspiracy theory of trouble at Wells Fargo. Thank you very much for watching my video. Please like the video and subscribe to the channel. When you like the video, it gets boosted up in YouTube and more people get to see it. And then I get even more subscribers. So I really appreciate you guys liking the video. Thank you very much. Have a wonderful day. We're going to keep reviewing banks. Thank you.